The course is a CE accredited course, and we are being sponsored by Henry Schein and Bank of America. If there's any questions at all, don't hesitate to submit your questions in the Q&A box. We will be sending out the CE credits, I think 5 to 10 business days after the course, and you'll see them in your email inboxes. And if there's any questions at all, you can keep my contact information, take it down, and reach out to me afterwards. But very excited to be presenting and delivering a lot of information just specific to the state of Michigan and what's going on throughout a very turbulent year. So before we get started, I'd like to just provide a little bit more information about Cirrus. We've been a very hyper-specialized firm that was originally founded really just to help dentists and their commercial office lease agreements. So the design and makeup of the firm is threefold. It's one market research team, a legal and leasing team, and a consulting team that really work in tandem to be sure that all of our clients' interests are met. Just when being sure that if they're leasing office space or perhaps if they own their property, that we can have a lease in place that's very dental specific and designed just to be aligned with the goals of that specific practice. We were founded in 1994, and since the inception of our firm, we've helped over 12,000 dental and medical office leases and practice owners since, again, 1994. Annually, we do represent between 500 to 700 doctors throughout Canada and the United States. And we do deliver a lot of continuing education seminars across the country. Typically, presentations like this would be delivered in-state, in person, at a whether it be a hotel or a conference center, but 2020 obviously is keeping things much more virtual. So here we are with a lunch and afternoon course. So a lot of the information will be condensed, but otherwise we've been participants at the Yankee Dental Conference, the Pacific Dental Conference, but this year is obviously focused just to be a lot more online. I perhaps have met with some of you that have joined the course. If you've been to the Greater New York Dental Meeting, the PDC, as I mentioned before, the Yankee Dental Conference, and we do go every year to the CDA as well. I wanted to just take some time at the beginning of the course to really focus in on Michigan. Again, the course is just specific to the state of Michigan and the difference that is going on for commercial real estate, whether you're a tenant or a property owner within the state. So this here is a vacancy and rental rate report that we have, and it covers the whole state and offers what the values are for spaces that are available for lease in both retail and medical office properties. You can see there that the market rent rate per square foot holds at $17, just shy of the $17 per square foot. Again, that's across kind of a larger sample size and not just one class of property, but several. And this is for a gross lease amount. So it's for the total lease amount, not just the base rent in a triple net lease. It's very surprising. I mean, Michigan as a whole and the commercial real estate values, they have not suffered in comparison to, a metropolitan area like New York City, where the rates are falling dramatically because landlords are getting very, very creative to try to keep their tenants from leaving the city. There's, vacancy rates are going through the roof in cities like New York City. But in regions like Michigan and other parts of the Midwest, we've actually seen some property values hold strong. And that's just because, well, the population for the state specifically is not, changing. But it is giving the tenant a great deal of leverage. And we'll get into some more COVID specific factors, but we do have another graph here for Detroit specifically. Obviously with the metropolitan area there, just the original value of the space for rent per square foot is a bit higher than the state as a whole. So the market rent rate per square foot in Detroit across, again, retail and medical office properties is just shy of $21 per square foot. We'll continue to see this graph change just throughout the course of 2020, the remainder of 2020. I'm sure after the election, there's going to be a change. as well throughout 2021 as the markets are going to take a change as well. Throughout in Troy, Michigan, it's proven to be a strong market, and just shy of $25 per square foot is what the office and retail properties are holding strong at. And then finally in Ann Arbor, we do have again a bit of a wide sample size here that outlines, spaces available for lease right now are being advertised at just shy of $26 per square foot. And this will inevitably change just as the year comes to an end. And the purpose of today's course is really to talk about the importance of an office lease agreement, whether you own your building and how you should have a lease agreement in place if you are actually a property owner, as well as if you're leasing your office space, and how you can take advantage of the market to negotiate better rates with your landlord. The property ownership aspect is something not a lot of people actually realize that Cirrus does. We're typically known for just being a tenant representation firm, but we do also have a lot of landlord clients. Specifically, I know last month there was a client in Lansing, Michigan, who had hired us to negotiate with his tenant. And it was just to have a lease set up because obviously the lease, as important as it is for a tenant, it is also important for a property owner. Uh, Today's webinar is also going to cover some of the key terms and conditions that are covered within the office lease agreement, just how it can really help the value for the practice if it's being appraised, as well as the property. And then just a few strategies, some tips on how to negotiate a lease agreement from the landlord side as well as the tenant side. So let's talk about that difference now. If you're a property owner or if you're a new practice owner looking to start up a practice and lease new office space, let's go over some of the differences. So to start with buying property, we've got a couple of points here. Obviously, if you're looking to buy commercial real estate and go through the major expense of starting up a dental practice, that requires a very large sum of money. Not many people would get approved for a loan of that size to start up a practice, let alone start a practice and buy a property. So typically, it's the more established practice owners that are able to do this. They're able to buy property, build equity in the asset that they would be paying rent on, and then in the future have something that they could rent to somebody else or sell to an investor, whether it be a dental corporation or a practice owner in the similar position that wants to own the property where they practice as well. There's a great deal of benefits to that. Obviously, just the sheer wealth aspect, becoming a landlord, not having to deal with somebody that would own the property where the practice is being held, and then in the future being able to earn that rental income is a very attractive aspect of just owning the property where the practice is located. There is a great deal of flexibility. Again, whether you look to sell both assets in the future, or rent out the space to a doctor that would purchase the practice, whether it's an associate now or a buyer in the future, there is a huge deal of flexibility there for property owners. And that comes with a great deal of freedom. The more common scenario for someone starting up a practice, they do have to look toward leasing office space. And there are some benefits there, absolutely. It requires a much smaller upfront payment. There's greater working capital that can be used towards building out the practice. A lot of the banks, whether it be B of A or Wells Fargo, they're oftentimes able to loan more money to somebody for startup expenses, which would include the expense for building out the practice. The benefit there for the property owner is that they're going to retain all of those leasehold improvements and basically benefit from the fact that a tenant could be increasing the value of the property that they would not even own. There is also the flexibility if somebody's renting the office space that they don't have to commit to it beyond a 5-year term or a 10-year term, that in the future they could absolutely relocate or open up another practice elsewhere, versus the property owner who is very well invested into that specific location and is not able to pivot and move the practice if that need ever did come up. So let's focus on how the lease comes into play. right? If you own the property, you absolutely need to have a lease agreement in place. It's just in place between the holding company that owns the property as well as the corporation that owns the practice. And essentially, for a practice owner that also owns the property, you would be paying yourself rent. You're moving money from one pocket to the other, but it builds a tremendous amount of value in the building that you own. And it proves a great deal of a track record of lease payments that move from the practice to the building itself, so that if you were ever selling the property or the practice, someone can really look and determine what the expenses are, what the annual rental income on the building is. And that's actually what determines the value of a commercial real estate building, right? If you have an annual income of $100,000 on a property and you can show that to an investor, that's going to be a very valuable asset that eventually you can one day sell. So if you do own your property, let's be very clear, you need to have a lease agreement in place. And if it's a multi-unit building, you have to have a lease agreement in place between yourself as the owner, as well as tenants in the other units as well. Likewise, if you are leasing your office space, whether you're looking to lease new space or if you're renewing your lease, you need to have an agreement set up, because the appraisal for the practice is predicated on the fact that there needs to be a commitment for the space that you rent from the building owner. If not, the value is not as great, and we'll get to the details of that now. And what is a lease agreement? I mean, it's something that I think is talked about very casually in a cavalier manner, but a lease agreement can be the most expensive thing that most people, most practice owners will ever have to agree to, right? If you're paying $10,000 a month in rent in a nice, downtown Detroit property in one of the office or retail buildings there, throughout the course of a year, that's going to total to be over $120,000 in a big rental expense. And if you total that over the, call it 20 to 30-year lifespan of a practice, that's near well $1 million that has gone toward the landlord's equity. So it is something that deserves a lot of attention, and we do really need to be careful in what we're signing, because if the lease agreement poses problems for the practice, it's going to result in a great deal of financial loss. So that's why it just deserves some attention and some specificity, because if you're renting your office space and it's not designed to reflect the specific business that you have, a dental practice, it could be very detrimental to the eventual sale. So why is it so important? The location for the practice really is the foundation, right? If you don't own the building and you are renting office space, the foundation that proves for a tangible value of the office space itself is determined through that lease agreement. Very different from residential real estate, but in commercial real estate, it is the lease agreement that governs all. It's that legal contract that determines the value of the office space itself. The lease agreement, it's going to really outline the total investment into the unit itself, the cost to build out the office space, whether that be achieved through tenant improvement allowances, or some kind of incentive from the landlord to help contribute to the build out. It's really going to determine the amount of overhead that's needed for actually occupying that space that the landlord owns. Anyone who's been through a relocation knows it's very, very difficult and an extremely expensive thing to do if you have to move, right? If you have to relocate the practice, it's not just the timing spent away from being chairside, where we're all, everyone's able to make money, but it's very difficult because the sheer expenses on building out an office space, going through the gas lines to the operatories, the plumbing, the electrical, is a very, very expensive expense. It's basically a very expensive factor to have somebody build out that space. So we just need to be sure that we're protected by way of the lease agreement. And eventually, when the practice is put up for sale, as I mentioned before, the value is going to be determined in part by the lease agreement. So I have a question now and perhaps try to answer them before I move on to the next slide, but there are three major components that help determine the value towards somebody who is leasing their office space. So if you're a dentist and you have a lease agreement in place for your office space today, there are three major factors that help determine the appraised value of the clinic. So first and foremost, and we'll see how many people could guess this. Number one is equipment. So the value of the equipment that you can sell to the buyer in the future. Number two is the goodwill or the revenue for the office space that helps determine how many billables the practice is going to have throughout the year. And thirdly, if you're renting the office space, the third major component that helps determine the value is the lease agreement. Again, it is the foundation for a practice if they are spending on space that they rent from somebody else. And if the lease agreement is not set up properly, eventually when the practice is put up for sale, it could be a major, major problem. And this is a lot of the work that we do is we just help clients set up their office lease agreement so that they're not in a precarious situation. But unfortunately, we do get pulled into very dramatic cases where some people are trying to sell their practice, whether it be in a year like this with a lot of uncertainty or during any year. And if they can't transfer the office lease, or if it's not as properly structured as it otherwise should be, the value of the practice will suffer. So what should the lease? I mean, we've talked about now how it can be a problem, but what should it do for you if you're renting your office space? And a couple of comments for you if you actually own your building. So if you're renting your office space, it should really outline and provide for fair and affordable financial terms, outlining how much rent you're going to have to spend in the office space for the next 5, 10, 15, 25 years. In addition to that base rental amount, you're obviously going to have the common area maintenance charges. So let's understand what we're paying for, and let's understand the stability with the amount of rent we're committing to over that very long term. It should minimize risk. If you're signing an agreement and it's filled of a number of risks, of liabilities for the practice, that is a very difficult position to put your business in. So if you can sign an agreement that does not have as much exposure to the practice, that's much more ideal. The lease agreement should provide a practice owner with more flexibility so that if you're renting your office space today, but you wanted to sell the practice in the future, the lease agreement really should allow you to do that. Because if you're not able to have a lease agreement that will allow you to actually sell the asset that you own, that's a huge risk. That's a big exposure to yourself and your business that you need to be very aware of. And as I just mentioned, of course, it needs to enhance the saleability, the eventual profit that you would receive from selling the practice. So what's in the specific lease agreement that you have? Well, everyone has a determined amount of rent and term that they're paying the landlord and that they've committed to for the space they're renting. But specifically, how is your agreement unique from everyone else's? So let's talk about that. Let's talk about term. So the option to renew beyond the initial term within the lease is something that allows you to extend the life of the initial term, the initial lease commitment. So I have an example provision here. It's an option to renew clause, and we changed the name, of course, just for confidentiality purposes, but this was copied and pasted from a lease agreement that we received from a client of ours. And I want to see now if you can outline any issues. So if you have a moment, look to see if there's anything detrimental here that you would think could pose to be an issue for this practice owner, for Dr. Black. The option to renew is something that's found in 90% of leases. Most Most building owners benefit from their tenants being able to renew their term because it just means more foreseeable and committed rental income. But there's a problem if an option to renew is structured like this. So some of you may have caught it, but the first thing I want to highlight is that first part of the first sentence. So this outlines that provided that Dr. Joe Black shall remain as the tenant, yada, yada, yada. Basically, the problem is this: if the option to renew is specific to Dr. Joe Black, the option to renew would not apply to anyone else. So as long as Dr. Joe Black stays in the office space, Dr. Joe Black specifically can exercise his option to renew. Well, what if Dr. Joe Black wants to sell his practice and transfer the lease agreement to somebody else? He can't transfer this amount of term to another doctor, someone who's looking to purchase his practice. And if you've gone through the process of buying and acquiring a dental practice, the bank will have to look at the lease agreement to determine the amortization period for the loan, for the amount of money that they would lend you to be able to afford the practice. And if there's only a couple years outlined on the lease agreement, it's going to be very difficult for someone to be able to pay back the bank within that amount of time. But if there's a very long and foreseeable commitment on the lease that the buyer can inherit from the seller, it's a much more easier transition. So the buyers, they don't have any issues with getting financing, and the seller's happy because there's no issue with selling the practice. But if Dr. Joe Black, if he can't transfer the options to renew, the buyer most likely won't have enough term on the lease agreement and would be stuck with potentially having to negotiate with the landlord themselves, which never, yields positive results because they wouldn't have, the benefit of control through being assigned a lease through Dr. Joe Black. So we need to be sure that these options to renew are not personal to you. Ideally, the lease is structured under a corporate entity, and the buyer, when they do purchase the corporation, that they would benefit from the options to renew as long as they're properly structured. In the interest of time, I'm just going to show a number of the other issues that are outlined within this specific clause, and then we'll move on to the next one. But for example, there's a number of things here. You can see in the second highlight that it says any such renewal shall be on the landlord's then current standard form lease. It's a very generic sentence. It's basically outlining that at the time of renewal, the landlord can change the contract. It's obviously, not something that a tenant would want to receive. So we just need to be sure that that's not going to happen. And if we can pre-negotiate what the rental rates are going to be, then great, let's do it. And then just on that note there, on that comment, the final highlight says, based on the market rent for the renewing tenants in the building. So outlining that the rent is going to go up and it's going to be compared to what the other tenants in the building are paying. We just need to be sure that the option to renew in the lease term provides for more predictable payments for the current tenant. The next clause that I'd like to go through is the assignment provision. The assignment provision is found in majority of commercial office lease agreements. It's extremely important for a dentist, for a practice owner, because the assignment clause is actually what outlines a practice owner's ability to transfer the lease, which is inherent or parallel to their option to actually sell the practice. If you cannot transfer the office lease, then you can't sell the practice for its full value. You could sell the equipment and the patient charts to a buyer, but it would be extremely difficult to sell the practice without being able to assign the lease agreement to somebody else. Practice's value is determined on its location and the leasehold improvements. So we just need to be sure that if you're renting your office space, then great, let's set it up so that you're not, you're not finding yourself in a difficult situation when it comes time to eventually sell the practice. So I'm going to turn to the first highlight that we have here, and it outlines a problem. Again, this is very generic language that was found from a client's lease agreement that they had sent to us from their landlord. but you can see just in that first sentence that if the tenant should wish to assign or sublet the leased premises, it shall first have received the consent of the landlord. So if you're a landlord, if you actually own your property, your tenant could never assign the lease agreement to anyone else without receiving your consent. I trust that all the landlords on this course today are good people, and then they would never unreasonably withhold their consent if one of their tenants were asking to transfer the lease. The fact of the matter is, a lot of landlords are not great. Um, they're not looking out for the tenant's best interest. And if you can't receive the landlord's consent for a transfer and you're renting the space, it's going to be very, very difficult to actually sell the practice. So we should ideally have a very detailed criteria here in terms of who the lease could be transferred to, and that the landlord's consent would not be arbitrarily withheld. The next highlight I have is outlining that the landlord shall have the option to 1, approve the tenant's request to assign the lease or sublet the premises, 2, decline the tenant's request to assign the lease or sublet the premises, and or 3, terminate the lease agreement upon the effective date of the such proposed lease assignment or sublet. So this is very common, but a landlord oftentimes wants a number of options if the tenant is trying to transfer the lease. And oftentimes it does include a termination right. We obviously, if you're renting the space and you're hoping to transfer the lease, and then the landlord opts to terminate the agreement, the sale of the practice is going to be in jeopardy. So we need to be sure that the landlord cannot, under any circumstances, terminate the lease agreement just at your mere request to transfer the agreement. The third highlight outlines that the landlord shall have the right to revise the minimum rent to be paid during the remainder of the term to the greater of the then current market rent for the leased premises of 15%, greater than the then current market rent. So if I'm looking to buy a practice and the seller's trying to assign the lease agreement to me, and all of a sudden the rent is going up, I'm not going to be as interested in purchasing or acquiring that practice because of this new rental expense. This is very common for landlords. It basically is a fear tactic that they'll include in their lease agreements in the assignment clause so that a tenant cannot transfer the lease to someone else. And if they ever try to, then the landlord would be owed more money. It is very unreasonable. It's not something that a lot of buyers for practices would agree to. So we just need to be sure, again, that the transfer of the lease is not going to pose for many rental increases. The fourth highlight outlines that should the tenant receive from the assignee or subtenant any rental income, cash goods, or any form of consideration in connection with the assignment of the lease or sublet of the premises that is over and above the current base rental rates, payable to landlord in any fiscal year during the term of the lease, the difference between the annual rental rate and the such rental income, cash goods, or other consideration shall be paid to landlord directly within 30 days. So a huge problem here, and this unfortunately is something that we see all of the time, but consideration is a flexible term that landlords will use, basically outlining if there's any money changing hands that's associated with the lease transfer, oftentimes the landlord is going to request that money. The only time a practice owner is transferring their office lease is when they're trying to sell their business, when they're trying to sell their practice. If the landlord's all of a sudden trying to get in the middle and collect the money from the seller to the buyer, that's the seller's sale value of the practice going right to the landlord. Their argument for that is always that they own the property, they own the leasehold improvements, and if the appraisal is based on the value of those leaseholds, that they should receive a portion of the sale value of that business. So no, this is unreasonable, and you need to be sure that the landlord does not have the ability to get in the middle of the sale and collect a portion of its value. It happens more often than you would think, and it can be simply rectified by just getting rid of language like this. So correct this language, be sure that it's not in your rental agreement if you're renting your office space today. And for those landlords on the program, oftentimes if you just have a lawyer draft a lease agreement like this, some of this language is very similar to subleasing rental language, and just be sure that it's not, it's not going to put your tenants in a unfavorable position. Um, a lot of the time, it's a landlord's prerogative to have a lawyer draft a very landlord-friendly lease agreement, but this is beyond a doubt unreasonable, and it happens from time to time. But we just need to make sure that that's not the case for anyone on today's course. The final highlight that I have here is, notwithstanding the landlord's consent to any assignment or subletting, the tenant shall not be released from its obligations under the lease. Basically, the description is in that sentence there. A lot of the time for a tenant, if they're trying to transfer their lease, the landlord, the property owner, wants to be sure that they have someone responsible for paying rent. And if the transferring doctor, so if if the practice is being sold and the lease is transferred, the selling doctor could still remain personally liable, so that if the buyer can't meet their rental obligations, the landlord still has someone to go after for that missed rent payment. When you sell your practice, you should be free and clear of any obligation. Again, let me reiterate, when you sell your practice, you should be free and clear of any liability or obligation. And this absolutely applies to the lease. So just be sure that ideally you have not provided a personal guarantee, and you're not going to be held continuously liable despite the lease being in someone else's name. A whole number of issues within this assignment clause. If you do have a copy of your office lease, I would just be sure to go and take a look and be sure that you're not in a similar situation. And if there's any questions at all, don't hesitate to reach out to us, and we're more than happy to provide some specific answers. So another, I guess, list that we have here for some traps that can be found within the lease agreement that are very detrimental to a practice owner, includes a great deal of potential liabilities to the practice. And for example, some of those issues could include the demolition clause for obvious reasons, a relocation right, if the landlord has the option to request financial statements from the tenant. So just be very well aware of what's in your agreement. Again, if there's questions about some of this language, I know a lot of the time it's very confusing or annoying, but we're more than happy to answer questions or go through your lease if you wanted to schedule a complimentary review. The lease agreement, again, it should have clauses in there that benefit you as a tenant, one of which is referred to as the death and disability clause. If anything happens to you or your health, you want to be sure that you and your family, your estate, is protected, so that you don't have to worry about your estate paying rent if, God forbid, the practice owner were to pass away, or be diagnosed with COVID, or any other suffer from any injury. So having a death and disability clause can be just a very good insurance provision to include in the lease, so that if anything happens to you, you can have the option to walk away from the agreement. A properly set up assignment clause is, of course, very important. And just given the market the way it is, I wanted to point out the subordination clause. So 99% of commercial leases will have a subordination clause in them. Basically, a building owner cannot get financing from a bank unless they have this included. So the bank is going to require that the building owner have a subordination clause in their lease. And it just outlines that if there's a foreclosure on the property, if the landlord cannot make their mortgage payments, then the lease agreements would be subordinate to that of the new owner. Obviously, we've seen a number of foreclosures happen already this year, and there's going to be more to come throughout the remainder of Q4 and on to 2021. So the way to protect yourself as a tenant is to have a non-disturbance agreement in the lease agreement, so that if there were to be a foreclosure, a change in ownership due to non-payment of a mortgage, that the new owner could not disturb you or the business. They would have to respect the previous agreed upon provision, that they couldn't just increase your rent or evict you. We saw a lot of this after 2008. But just be sure that subordination clause also has a non-disturbance agreement. Likewise, if you're in a retail setting or a larger office building, and you're the only general dentist, or if you're the only specialist within that property, it's very ideal to have an exclusive covenant so that you don't have to worry about any kind of unforeseen competition being allowed to lease space in that same property, right? If you're a general dentist and 20% of your gross production is related to the ortho work that you do, and an orthodontist, moves into the building and they now all of a sudden have an exclusive covenant. Um, by law, that practice owner and the landlord could serve you with a non-compete, and then you've lost 20% of your annual revenue. So just be sure that if you can, to ideally have that exclusive covenant associated with your use clause. And then the improvements and alterations provision. I was wanting to go through a very long example of that same clause, similar to the option to renew an assignment provision that I had up on the screen, but just in the interest of time, a quick description of the improvements and alterations clause ideally should not put you in danger, but oftentimes it does outline that if you were to leave the space, if the tenant exited the landlord's property at the termination or the expiry of the agreement, then the landlord oftentimes has the right to require that exiting tenant to restore the premises back to its previous condition. So if you put in a lot of leasehold improvements, again, that plumbing, electrical, or those gas lines I had mentioned, then the landlord could have you take all of that out, and that's going to be very expensive. Oftentimes as well, if someone's looking to buy a practice and they see that liability there, it's a great tool for a buyer to say, hang on now, I'd like to submit a lower or reduced purchase price because of that liability. So just be sure that the alterations language within the lease is not in the favor of the landlord. So timing is a huge part of life and a huge part of business, and no different to the lease agreement. But we have here a tenant lease cycle. So if you are leasing your office space, let's talk about when is the best time to approach the landlord and discuss making changes. This, again, has three key factors. If you're looking to lease new office space, obviously don't, agree to anything that's in the landlord's favor. Take advantage of that leverage before signing the lease. If you currently are leasing your office space and you have ideally up to 24 months before the expiry, that's when it's best to start the process of talking to the landlord about these changes. For all of our clients, we always recommend at least 2 years before the expiry is the best time to reach out to them and start the discussions as to what kind of changes we want for the upcoming term. Now, why 2 years? Why is 24 months appropriate? It's appropriate because it would typically take a dentist close to 2 years to go through the process of relocating. A dental tenant is an extremely valuable asset for a building owner to have. So if you're renting your office space, that landlord is thrilled that you're there because you're bringing people to the property. You have a very, very low default rate. And it's just making their building ever more valuable, and they would never want to lose you. So if you reach out to them 2 weeks before the lease actually expires, there's not a lot of leverage. If you reach out to them and start the process 2 years before the lease expires, there's a great deal more leverage to affect change. And we know that landlords can be slow, and their representation oftentimes can be very slow. So we just need to be sure that that's not going to take place, and taking advantage of the 2-year tenant lease cycle is appropriate with that in mind. I've mentioned before, but if anyone wanted to connect with us for a lease review, more than happy to. Typically, we do have a fee for the critical dates and risk analysis lease review service. But just due to the sponsorship we have with Bank of America and Henry Schein, there's no fee associated with the lease review today. Basically, it outlines that we would spend 3 or 4 hours analyzing your lease. Our leasing and legal department would go through your agreement if you wanted to connect with us. Then we would connect for a phone call, discuss a vision or plan for your practice, so that if there's anything in mind for goals associated with the business in 5, 10, or 15 years, we can outline how to strategically go about achieving those goals by way of the lease. We would, of course, outline any kind of liability that would be included within the agreement. Um, Talk about ideally what would look best for you, and again, just how to align the lease provision so that they're acting more of a as an asset to the practice and not a liability. And then just get very specific with a tactical plan on how to effectively achieve those results. We do have a questionnaire that's available, and it's basically just to outline again if you uh, to ask if anyone is presently a tenant leasing their office space today. Just the simple yes or no allows us to track the data. Outlining when your lease does expire. It's always great. I know many people just keep a copy of their office lease kind of tucked away in the back of their shelf, just collecting dust. But very important. Hopefully, this can prompt some people to be more aware of when the lease actually comes up for its renewal. And prior to that expiry, there always is going to be an option to renew deadline, which would outline your ability to actually invoke that option to renew. So to be very well aware of when that option deadline is, and then the lease expiry. Best to have that in the back of your mind, or someone on your team just very well aware of when that is. We do track these dates and provide reminders. So the simple click of the within 12, 24, 36 or greater than 36 months allows one of our team members to just send out a reminder well before the lease actually comes up for its expiry, because the last thing you want to do is find yourself in that month to month situation. If anyone has more of an urgent situation, please don't hesitate to reach out. I mean, we've got a great team of consultants, whether it's myself or one of my colleagues. We're more than happy to speak with you and answer any questions that you may have. There is a lot of estate planning going on this year, and the practice should be treated very seriously, and its protection needs to be taken into account. So if there's any questions just on how to protect the practice and make sure that the eventual sale is not going to be affected, we can absolutely answer those questions and just give a more specific um, kind of client-oriented consult and discussion as to how to help. Um, if anyone is interested in a complimentary lease review, again, don't hesitate to reach out via email. And finally, I'll open up the floor to any questions.